Ladies and gentlemen, welcome back to the channel. Markets are soaring higher today. IWM, this is the Russell 2000, is up 1.3%. S&P is up 1.84%. And the NASDAQ is up 1.13%. The NASDAQ and S&P hitting new all-time highs. Now, in today's episode, we're going to be going over what is causing this reaction. And I mean, we talked about it, but Trump wasn't going to put out a bad CPI report, and they didn't. Okay, so CPI is the main catalyst today, causing the upside, but we will get into more specific news as well on the broader markets, and obviously cover what in the world is going on with Tesla. And I think we have the answers to that after really the huge recovery you had from down almost 5% in pre-market to closing up yesterday, up 2.3%. You're giving some of that back today, but it actually doesn't look bad at all. So hit the like button as well as subscribe to the channel, ladies and gentlemen. If you have not done so already, check that link out down below in the description of this video. If you want to come invest with us, come trade with us, come target these very under the radar opportunities. Wall Street is completely ignoring some of your AI stocks, some of your energy stocks, robotic stocks, quantum stocks, and we are seeking out those opportunities that are being ignored. And well, that comes with some pretty significant upside. I'm not a financial advisor, I'm not a financial planner, but if you want to come join, that link is down below. Let's go ahead and get into, first things first, what's happening today with Tesla stock. Now, we are going to get into all of your specific Tesla stock news today, but I do want to explain for anyone that is a little confused what's happening today for Tesla. There's nothing specifically that changed, okay? There is no specific single point of news today that is causing the 3% drop from what I have been able to find. I think it really goes back to what we talked about yesterday, okay? Tesla, by most definitions, had blowout earnings, okay? Revenue beat by $2 billion. They added over $4 billion in cash to their balance sheet. The margin came in 800 basis points, better than expected. It was a pretty clear blowout across the board for Tesla's standards, okay? Keep in mind, Tesla normally misses on pretty much everything. Tesla did miss on EPS a little bit. They did miss on operating free cash flow a little bit. But besides that, it was basically a blowout. Now, the conference call was very exciting. Elon's talking about production of Optimus next year, Cybercab heading into production in Q2, 8 to 10 cities getting FSD by the end of this year, or well, robotaxi. Okay, it was a big win for shareholders. That's why when the stock was down 4 to 5%, it recovered from the lows. Analyst price targets started coming out, raising price targets by large margins. Okay, and we'll look at some of those in today's episode. But it was clear Wall Street got it wrong with the 5% almost down move we had. So you recovered a little bit. The problem is, in my view, why Tesla is not continuing to rally on a day like today, especially with lower than expected CPI, is because we have this big shareholder vote on November 6th. Now, if you have not voted your shares, this is the most important vote in the history of Tesla. If you're not going to vote, you might as well sell your stock because, I mean, if the vote were to fail, it would be partially your fault, okay, for not voting. This is the most consequential vote for Tesla in Tesla's history, okay? This is a vote that must pass. Now, I think the odds are really good that it does pass, but until we get the vote that passes, there's uncertainty. Now, Elon has said he will not run Tesla without a compensation package. Now, if the vote theoretically fails, I'm sure Tesla could come up with another package or something else, okay? But it took 8 months to get this package. It would not be a good situation. How much of the premium in Tesla is because Elon is the CEO? A lot of it. Okay, if Elon was not the CEO of Tesla, it would not trade like it does. Okay. So what if the vote were to fail? Yikes. That would not be good. Okay, that would be significant downside for Tesla. So I think it's keeping a lot of investors on the sideline, whereas a lot of people are like, hey, look, Tesla's going to be successful in robotaxi. Tesla's going to be successful in Optimus. And I think a lot of people, a lot of Wall Street guys, they want to buy Tesla. The setup looks good. The stock from a technical perspective looks good. What Tesla is doing and what they're saying looks good and sounds good. But you have this big ominous vote November 6th that could cause the stock to drop 50% if the vote doesn't pass. I don't think a lot of Wall Street want to get ahead of that when there's maybe 20, 30% upside, but 50% potential downside. The risk reward doesn't make sense until the vote passes. Okay. So, if this market continues to get better and better, look, better like it is today, I think Tesla can work its way higher into November 6th, but I don't see the rally to like $600 or even into the mid 500s until then. I think kind of a ceiling for Tesla between now and November 6th is around $500 per share. And I even think getting to new all-time highs around that, 488, 490 level is a target between now and November 6th, but anything above that becomes really hard to justify with a major volatility catalyst on November 6th. And I think that's simply what's happening today. I think Wall Street wants to invest in Tesla. Why would they not? Okay. But again, there's this big risk on November 6th. And I think that is why Tesla is down today a little bit. Now, considering the move from the lows yesterday, you're basically unchanged from the last month. 5-6 weeks. You're basically unchanged. You're trading in this range. Okay. And I do think, again, you could get a little bit of a breakout from here before November 6th, but it does keep a lid on things. Now, after November 6th, I think there's an 80+% chance Elon's compensation package is approved. And once it gets approved, then you're going to really see the, dramatic upside move after that vote takes place. Now, one of the big price target increases for Tesla was from Cantor Fitzgerald. They raised their Tesla price target by 43% yesterday to $510 per share from $355 while maintaining an overweight rating. The firm remains bullish on Tesla over the medium to long term on, quote, meaningful future upside from energy storage and deployment, FSD, robotaxis, cybercab, semis, and the Optimus bots. Here on the day-to-day in option activity, you have 175 different hedge fund and institutional options trades totaling $123.39 million with a positive order value of 88%. It's not like hedge funds and institutions are bearish. They just don't want to, overextend themselves in Tesla right before November 6th, right? If you were managing with a fiduciary responsibility other people's money, it would be kind of reckless to overextend yourself into Tesla before such an important vote on November 6th, right? Doesn't that make sense? So I think that is the thing holding Tesla back. Not that earnings were bad, not that this is the start of a larger move lower. I don't think that's the case. I don't expect Tesla's going to fall from here, okay? It's going to trade in this range between 420 and 480 most likely before November 6th. And again, here on the day today, short sellers are covering 387,000 shares. You have 2.73% short interest of free float, 76.82 million shares sold short, totaling $34.57 billion currently sold short. Now, in broader EV news today, Ford's electric vehicle division lost $1.4 billion in Q3 2025, while EV revenue was up 50% year over year to $1.8 billion. The company just reported the EV unit had a negative EBIT margin of 79%. Ford's total electric vehicle division lost $3.6 billion year to date in 2025. The Tesla Model Y was Europe's best-selling car in September, returning to the #1 slot for the first time in 9 months. Now, the Ford F-150 Lightning production to remain paused indefinitely due to the aluminum plant fire. The fire has also halved production of the ICE Ford F-150, a top seller and highly profitable model. Panasonic, a partner with Tesla, is working on eliminating the anode in batteries during the manufacturing stage to increase energy density through technology it says is likely to provide a world-leading level of capacity by the end of 2027, which could give the Model Y 25% more range. Morgan Stanley's Adam Jonas says Tesla's robotaxi seems to be getting solved faster than nearly anyone thought. Tesla is, quote, navigating a dignified exit from the steering wheel having auto business while maintaining a resilient FCF profile, that stands for free cash flow. Going forward, Tesla is tied to Elon's ability to steal the fire on autonomy in the face of competition from Mag 7 and beyond. And check this out. Over the next 1 hour, Tesla's global vehicle fleet will be able to provide nearly 21 years of driving data for the company. No other automaker vehicle fleet comes even close to being able to provide that. Tesla has a massive data, tech, cost, and scale advantage. And I just want to show you guys that I have completed my vote for my Tesla shares. I did vote in favor with the board's recommendations on every proposal. The board knows what's better for Tesla than I do. Okay? So that's how I voted. Make sure you go out and vote your shares. Okay, now in broader news today for the markets, what is causing the markets to skyrocket is the September CPI that was softer than expected. Okay, core prices rose 0.23% in September, lowering the 12-month core CPI to 3.0%. Headline prices rose 0.31%, and CPI is 3.0% over the prior 12 months. The estimates, the consensus estimates for core month over month was 0.31%. Okay. The year over year core number was expected at 3.0%. So core month over month at 0.23% is a big surprise to the downside. But it's not so weak that you get economic concerns, okay? Because a super weak number would have been like maybe questionable, like it would have caused or brought up concerns about the economy. Okay, so as far as banks are concerned, the only estimate lower was Moody's that had an estimate for core month over month at 0.22%. Every other estimate, let me rattle them off to you. Wells Fargo, UBS, TD Securities, Pantheon Macroeconomics, Nomura, Morgan Stanley, JP Morgan, Goldman Sachs, First Trust, Employ America, Deutsche Bank, Citi, Citadel Securities, BNP Paribas, BMO Capital Markets, Barclays, and Bank of America all had higher estimates. The median forecast was 0.30% month over month. We came in at 0.23%, okay? Significantly lower than the median. But certain banks, like Nomura, had an estimate at 0.35%. They missed the ball by a large margin. Morgan Stanley, 0.32%, missed the ball by a large margin. Deutsche Bank, 0.32%. Citadel Securities, 0.32%. BNP Paribas, 0.32%. BMO Capital Markets, 0.32%. Barclays, 0.36%. All of them missed the ball by just missed it by a mile, okay? Now, for year over year expectations for core, Moody's was the only one that was correct. Oh, First Trust was also correct at 3.0%. Everyone else was at 3.1% or 3.2%. Barclays, 0.32%. PNB Paribas, 3.2%. JP Morgan, 3.1%. Okay? Nomura, again, 3.2%. Most of them were at 3.1%. That was the consensus estimate. So across the board, better than expected. Last month, we were at 3.1% year over year for core. And month over month was 0.35%. So last month was 0.35% month over month, and we just came in at 0.23% month over month. That's quite a large move lower in just a month. Okay, guys, I said it on this channel many times, many times. I don't think I could have been more clear on this. Okay, we were going to get a better than expected CPI report today. One of the last videos, you know, like all of the prior videos posted to this channel all said the same thing. Trump was not going to put out a bad CPI report. They did not have to put out a CPI report today. They chose to because it was going to be a good report. Okay? That was part of the whole bullish premise for this week. I wanted to be in stocks. I wanted to be buying the dip because CPI was going to come in strong. Okay? Now, what's interesting and what I heard a lot of talk about yesterday was that Wall Street is actually nervous about big tech earnings more than anything else. Okay? Interesting. I can't find the specific VIX, but there's a VIX that measures single stock volatility. Let me find it. Okay, so like I thought, it is the VIX EQ, the VIX equal weight. Now, I couldn't actually find this on any of the charts. It just doesn't come up because it's brand new, which makes sense, okay? So you actually have to go to Google to pull this up. And I don't know why it just won't even like let me type on Webull right now. So that's cool. Don't understand what's going on there. Okay. Awesome. Just won't let me type. I don't know what the hell's going on with Webull right now. But if you look at Google, good old Google, okay, you can see the VIX EQ. Okay. This is single stock volatility. So this is a VIX, not like the normal VIX, which basically measures the volatility, the difference between calls and puts being bought on the S&P index. Okay, that's what the VIX is for 30 days out. Okay, so the VIX recently spiked. It's come down a bit. But when you look at the equal weight VIX, that is basically showing you single stock volatility, that is still very elevated. By comparison, the single stock, this VIX EQ, hit a high of 70 on April 8th. The VIX hit a high of 52 on April 8th, okay? The VIX today is at 16.64, okay? The VIX EQ is still at 40. So apples to apples, the spread between the two is at a level we've never seen before. Okay, what does that mean in English? Like, what is that telling us? That actually suggests that people are not that nervous about the headline S&P. But on a single stock basis, there is a lot of volatility. Okay, this is something we have known for a while now. Like with single stocks the last couple of weeks that have been, you know, selling off, right? The index has not been selling off. But even deeper than that, it suggests that next week, markets are concerned about big tech earnings. It suggests that maybe this sell-off has been what I've heard, you know, commentators on CNBC talk about, is Wall Street is just nervous about single stocks like Apple, Microsoft, Google, Nvidia for their earnings. They're not as worried about the broader markets, but they've potentially been selling stocks recently, like AI stocks, because of potential for bad news on mega cap earnings. Okay, so maybe it wasn't the government shutdown that was causing the fear and selling in markets. Maybe it has not been the trade tensions with China, but maybe it's nervousness around CapEx for AI at the hyperscalers. That's what a lot of people have been talking about now on CNBC, which could make some sense, but honestly, that sounds ridiculous because you shouldn't be worried about AI spending at the hyperscalers. That spending is going to continue for a long time. Now, today is especially interesting that it's so bullish, even though Trump eliminates all trade talks with Canada over a Reagan TV ad. Trump said he was doing so because of an allegedly fake advertisement that Canada was airing that features former President Ronald Reagan speaking negatively about tariffs. Ontario Premier Doug Ford, whose province launched the ad campaign, wrote after Trump's announcement, quote, President Ronald Reagan knew that we are stronger together. So trying to, suggest that the US and Canada should work together, which obviously I think we should. Ford recently said Ontario would spend $75 million on ads to run in the United States featuring Reagan criticizing tariffs. So yeah, despite US-Canada trade talks reportedly ending, the markets don't seem to care at all. There is basically no reaction from that. Today is really all about CPI. China holds security talks with the US as its vice foreign minister meets a US delegation in China. Colombia dialogue with the US on tariffs is quote unquote fluid, said the ambassador. And Russia today vows a strong response to EU sanctions. Japan's trade minister spoke by phone with US Commerce Secretary Lutnick today. Wells Fargo says today that they expect a 25 basis point Fed rate cut on October 29th. JP Morgan said yesterday that they are expecting the Fed to stop quantitative tightening, that is the practice of selling assets on the open market, reducing the size of their balance sheet, next week. That could be really positive news for stocks. Mexican President Sheinbaum says, quote, we're going to wait when asked about U.S. decision to terminate trade talks with Canada. BlackRock CEO Larry Fink has said AI is not a bubble, but there will be failures. This is capital that is mostly well spent. And that's obvious, especially in the venture capital world. There's going to be some companies that do not make it, right? If you are a venture capitalist and you're investing in 100 startups, probably 90 of them are going to fail. But the 10 that are successful are going to be wildly successful. And that makes up for the 90 that failed. Now, the odds of 3 rate cuts in 2025 reach an all-time high of 85% following the data out today on CPI. Now, as far as the Fed rate monitor tool, this is something you guys can look at every day to monitor where the markets are pricing Fed policy. For October 29th, there's a 98.5% chance of a Fed rate cut, okay, on October 29th, okay? 1.5% chance of no cut, so it's basically a certainty. Now, you're looking at a 97% chance of another Fed rate cut, okay? For January 26th, there's a 57.8% chance of another rate cut, okay? So you're pricing in 3 rate cuts over the next 3 Fed meetings. For March, there's a 28% chance of another rate cut, but a 49.7% chance of a pause. So you're pricing in a cut October, December, January, and then pricing in a pause for March. White House senior advisor Hassett, when asked if the China trade deal comes by November 1st, says, quote unquote, we'll see. Hassett says that inflation numbers were fantastic. Hassett says that there has been some thawing in recent days with China, so suggesting that tensions are getting better around trade, not worse. Hassett says we're frustrated with some Chinese actions, and he says that Trump and Xi are great friends. White House senior advisor Hassett says the shutdown could drop GDP by 0.1% each week, and he says there is no evidence that tariffs are causing inflation. Canada's Prime Minister Carney says Canadian officials have been working on negotiations on trade. A lot of progress has been made, and we stand ready to pick up on progress when the U.S. is ready. And White House senior advisor Hassett says that he expects further inflation reductions in future reports. Now, we did have other data that came out today. S&P Global global composite PMI came in at 54.8. The estimate was 54, and last month was 53.9, so that was better than expected. Manufacturing PMIs came in at 52.2. Last month was 52.0, and the expectation was 52, so that was better than expected. And global services PMIs came in at 55.2 versus 54.2 last month, and the expectation of 53.5. So all of these S&P PMIs came in better than expected. Now, Michigan consumer sentiment came in at 53.6 on the headline. Last month was 55.1, and the expectation was 55. So that came in worse than expected. 5-year inflation expectations came in at 3.9% versus last month at 3.7%. Consumer expectations came in at 50.3 versus last month at 51.7. Current conditions came in at 58.6 versus last month at 60.4. And 1-year inflation expectations actually came down to 4.6% from 4.7% last month. But I'll tell you, the Michigan Consumer Sentiment Survey is very flawed, and it's only like 200 respondents that are like 70% Democrat. So I don't know how much Wall Street cares about these numbers at this point. Today was really about CPI, trade talks sounding like they're getting better with China, and that was that. Even the trade fallout with Canada largely was ignored today. But the big catalyst next week is going to be the Fed and big tech earnings. Like, next week is going to be absolutely wild. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of this video if you want to come invest in these under the radar AI, software, biopharmas, quantum, robotics companies alongside us. Ideally, we are not trying to chase the stocks that everyone already loves and knows about. We want to find the next big winner before Wall Street does. And that is what we have been doing. And that is how we are able to outperform the S&P by like 15x this year. Okay. And I believe if we were a hedge fund or institution, we are the best performing hedge fund or institution this year. Not 100% sure on that, but we are up like 150% year to date. And I don't know if any person on Wall Street, any firm on Wall Street that is even coming close to that. So yeah, check it out. Link down below if you guys would like to. Also, sign up with Public. Deposit $1,000 and get $100 in your choice of free stock. That's literally free money. If you guys would like, that link is down below. Public is my favorite brokerage by far. Have a great rest of your day, and I will see you in the next one.